Risk management is such a pillar in trading. Without proper risk management, your account will blow up time and time and time again. Without risk management, your losses will outweigh your wins. Risk management is one of the first things you should think about when you're executing a trading strategy. So in this presentation, we're going to do a quick demonstration on risk management, why it's important, and how to execute. So there's 4 things to really remember for this strategy. Each trade, we can risk maximum of 15% per trade. We do not want to overexpose ourselves to any trade because ultimately we don't know what the future is. If you're more advanced, you can be a little bit flexible with this, but if you're just starting out, I highly recommend you stick to 15%. And 15% is high, but we only take a few trades per year. So we have to adjust what we're risking per trade. When we first enter into a trade, we only take half size, 7.5%. Usually there's sideways action or even a drawdown after entering. So we can use that to our advantage and add to the position at better prices along the way. If we never get that chance and price just goes straight to our target, that's even better for us. We got an easy, quick trade. The third point to really remember is you have to wait for your targets to be met. You cannot take profits early and you cannot get out early. If you do that, you're changing the entire trade and you're changing all of the statistics, and essentially you're not trading with the edge anymore. So you have to take profits only when it's time to take profits, and you have to exit only when it's time to exit. As you're in the trade, you're gonna see fluctuations up and down. That doesn't matter. All that matters is the price going to either exit. Those targets is ultimately what you're after. You do not care that it's halfway to your exit in profit or halfway in exit to your loss. That does not matter. The only thing that matters is the price reaching the targets that you're setting. Everything else is ultimately noise. And this is why we stick to high time frame charts, because in the lower time frame charts there's tons of noise, tons of up and down, tons of meaningless manipulations that are happening, and there's tons of ways for you to be emotionally stressed and get yourself out of the trade. So you only want to focus on the big picture, which is the exit on either direction. So this is a demonstration on how important risk management is. Let's suppose you're taking 6 trades. The first trade, you lose. You're down 15%. The second trade, you lose. You're down 15%. The third trade, you lose. You're down 15%. After the third trade, you basically lost half of your account. But each time you took those trades, you were trying to make 3 times what you were risking or 2 times what you were risking. So when you finally do get that win, multiple losses will be erased and eventually you will be in profit. However, if you don't have risk management and you risk too much, you won't be around to see the winning trades. Your account will get blown up long before you catch a winner. Or it could be you catch a winner and then you lose all of it because you don't have risk management. So as we can see on the 4th trade, we finally did catch a winner, and then the balance went back up to 85. And then on the 5th one, we caught another win and we made 45, which is 3 times what we risked. And now the entire account is in profit. And then the last trade, we caught another win, and then we ended up with almost double the account size. So this is what the chart would look like. Down, down, down. But because of risk management, just a few trades and a very low accuracy of 50%, this can happen. So for this particular scenario, we have a 50% win rate. We have a total return of 75%, an average win of 30%, and an average loss of 15%. All of that is possible, and gains are possible because of strict risk management. And one thing to note is our strategy more than a 50% accuracy, and we make more than 3 times what we risk very commonly. So this is just a hypothetical scenario. Depending on how well you execute and how well you control risk, you can make even more than this.